much. Let me share my PowerPoint. Okay, I think everything is good. First of all, thank you very much, Nikki, for the introduction. I would, of course, like to echo our CEO Michael's words. Grandly Financial is extremely conscious of its firm's social responsibility, and it's definitely an honor, along with direction, to be able to sponsor this event. It is an event that I think holds quite close to my heart, and I will sort of go through that as we go through this presentation. Of course, special thanks to CityU and Calvin and the team for helping make this reality, and it's also an honor to share the stage with my fellow presenters, of course, Phillips, Angel, and Eddie. So a little bit about myself. My name is Jeffrey. I'm currently Managing Director and Portfolio Manager at Grandly International Financial Group. We are a conglomerate, full-fledged financial service conglomerate, focusing on sort of trying to provide investors a hub for all the global investment needs. I personally run our flagship fund, and my background is actually in investment, portfolio management and investment. And previously, I've worked at AllianceBernstein in New York as a portfolio manager and head of quant research, as well as at Nomura Securities International in New York as a global macro strategist. This is a very interesting topic for me because I've looked at investing in ESG and invested in ESG for probably 6 to 7 years now. And what I really do want to share today is less about the concept of ESG, which I think our first two speakers has shared brilliantly, but more coming from a real investment and portfolio manager's perspective. How do I look at the space? What is our current consensus? What is the frontier of the research? And more importantly, give you some views on my view on the future, right? Well, I think it's important to first let's define ESG, right? Of course, we know ESG stands for environmental, social, and governance. I don't need to spend too much time on this page. For environmental, we're worried about climate change, carbon neutrality, staying green. For social, I think the only point I want to make on this page is that environmental, I think we understand fairly well, but just one needs to remember social and governance is two huge part of ESG investing as well. And social, I think, comes from customer service, employee engagement, human rights and labor standards, etc. As well as for governance, it's about executive compensation, working with the right leaders, company structure, lobbying, etc. Right? So it is important, in fact, from an investment perspective, sometimes even more important to look at both social and governance aspects of ESG. It's not just purely purely environmental, right? But what I think is often overlooked for ESG is that we talk a lot about it, but it's barely disclosed in financial reports. It's been improving a lot, which is good. It is an important aspect of investing and it's an important aspect of a company, but it's hard to actually see it in a financial statement. But I think it's without a doubt, if we use company as an example, or equities, particular company with a good ESG policy brings value both to society and to its investors. So it actually reflects importance of intangible assets, which is where things gets a little bit tricky, because how do we standardize something? Can we use other metrics to look at whether a company is ESG? Do we take their word for it? Do we look at independent research, independent reports? And I will briefly go into all of that. It's grown out of social responsible investing. That is something that dates back to the 70s. It's a lot, I think, different and in a way better. A lot of the SRIs is more moral driven and perspective driven. Of course, we understand what ESG generally have a correct definition. We have independent definitions, which I think is important here. And as I said, despite that, it is not standardized depending on the market, depending on what government and what regulation it is and what the investors think. There's no one right answer for ESG, right? So before coming away from really what is environmental, social, and governance, I think it's more important to understand the concept, right? And from an investment perspective, it is to identify ESG and how to pinpoint exactly how to invest in ESG, I think is most important. And from a social perspective, just because a particular company or particular investment has an ESG label doesn't make it necessarily exactly about ESG, right? So I'm going to talk a little bit about why ESG investing, right? I think the previous two speakers has mentioned, and this is the most important thing, both for me personally, and I think one should take away from it because it is simply the right thing to do, right? A lot of times as portfolio managers, we are under pressure to deliver returns, where we are under pressure to make the best financial gain. But I think it's important, and this is why we all gathered here today, it is to look at what is the right thing to do, right? We want to protect the environment for current and future generations. We want to lead investors and employees to be better members of society. And we want to follow and work with worthy leaders, be it from a government perspective or from a company corporate structure perspective. And I think if we all do that, it makes the world a better place. And as I'm about to mention, it doesn't hurt. In fact, it helps investing, and it just helps everyone in general. So I think that is the most important thing I want you guys to take away, that we do ESG because it provides good return. We do ESG because it is the future, it is technologically advanced, but we mostly want to focus on ESG because it's simply the right thing to do. The second reason why I think it's ESG, I think Philip has mentioned, this is just some data from Bloomberg. It's a little stale, but it's because it's just huge. Various projections looking at hundreds of billions to trillions of dollars in ESG, depending on how you define the universe, how you define projections, and what exactly ESG products we're talking about. Once we include derivatives and notional amount to that, this number definitely goes into the trillions. And as anyone who wants to invest in finance, or anyone who's sort of part of member of society, when something gets this much attention, gets this much money, gets this much flow, and everyone cares about it, then it is automatically important. So of course you don't want to alienate or ignore a huge section of the market, a huge section of your potential client base, and a huge section of investor insight. So that is a second reason to look into ESG. Whether we like it or not, it is here to stay, and it is extremely important. And I think this is really the third reason why we do ESG, but perhaps I can offer the most unique perspective as an investment manager, is that ESG provides excess return. I think there's absolutely no doubt about that. It is widely established that, by market research, academic research, market practitioners, etc., that ESG investments generally provide more return. One particular paper estimates it to about 3% per annum in the equity space, but this number varies anywhere from 1% to 5 to up to 10%, depending on exactly what asset class, exactly what strategy, and exactly what time period you look at. I think what is very interesting is that why it creates return. And I think there is not necessarily current consensus on that aspect. One, and this is a proposal I believe, and one of the leading theories, I guess, is that ESG investments are often just better quality investments, right? As I said, a company's intangible assets is an asset. Once we invest in ESG conscious companies or ESG conscious investment targets, they're just simply better companies, and better companies should produce better return, right? And secondly, excess return is also, I think, undeniably driven by flow. We've seen how much the space and the area has grown into, and we've seen how much space in the area is expected to grow in the future. And with majority of the outperformance started in 2013, when the ESG investing started to really kick off. When a lot of people rushes to buy this particular asset, of course, you're going to see that outperformance. Now, some of you, of course, is mentioning how sustainable it is. Is that a concern? And I'm about to sort of mention it a bit later as well. I personally don't think it is, because there's absolutely no sign this field is slowing down. In fact, if anything, we expect performances flows to continue to grow, which means outperformance due to funds and flow is expected to grow as well. In addition, because of the importance of ESG to some people, because it's the right thing to do, a lot of ESG investments has been known to be much more stable than the fickle investor who will greatly reduce an investment target because they're only looking at the price performance, right? But when ESG, you are fundamentally tied to something much bigger than just making money and really one person, there's evidence to suggest that flows in ESG are much more sticky, and ESG investment targets retain their investment assets or investment funding much better, which are, I think, all important things. However, I think I would be amiss to not mention sort of, let's just say, controversial views, or still what is debated, right? As a portfolio manager, one of the things that is always front and center of my mind is risk, right? And I would be lying to you if I told you ESG is the greatest thing. There's absolutely no risk. Everyone should rush into it. And I think it is fair that there are some, especially the newest research coming out in the past year or two, has suggested some debate in the ESG field from the investment perspective. I think the most recent debate is that ESG, whether ESG is an alpha or a smart beta. I use these two air quotes. What I basically mean is ESG something that is extremely hard to replicate, that is independent of a lot of market conditions, and it is really something you can only capture using ESG and very high-level techniques, which we generally call alpha, or it is something a huge trend right now, what we call smart beta. It is basically something that is, of course, provides an excess return. I don't think there's any debate on that, but it is not as unique or mysterious or hard to capture as some people may say, right? And I think the latest research suggests that ESG investments do not outperform if one controls for the other factors, right? So I told you ESG performance is partly due to because we invest in good quality companies. Are there other ways to detect that? Is ESG outperformance is due to flow in capital inflow? Or what if we sort of adjust for that performance, right? Once you sort of adjust for everything, ESG investments, there's some research that suggests ESG investments don't outperform, which basically is saying that these ESG outperformance is not due to or necessarily due to the fact that they are environmental, social, and governance responsible, but more due to the fact that good companies are environmentally, socially, and governance responsible, and therefore they make good investments, and therefore they make really they provide an outperformance, right? As a company does well, higher profitability, higher management, better quality management team, good leadership. Of course, from that perspective, their company stocks should go up higher, and it's only these companies that are most innovative, that most focused on ESG, and that most care about their social responsibility, which of course brings me back to sort of my overall theme is that the good companies should care about that. And to be a good member of society and to be a good company, one should care about that as well, like Renly does, right? So there are research that suggests that. And there are others that argued that because of higher valuation, because of the outperformance over the past 8 to 10 years, there could lead to higher downside risk because of if flows tends to reverse or if some things happen, the opposite might flip. And to be completely honest, the latest sort of global drawdown due to the geopolitical issue is a good test of that. And from my, as a practitioner on the market, no, I honestly don't see that. I think it's easily believable that one sees that even in a heightened geopolitical and add to COVID, this general environment, companies that have higher social responsibility and is better managed tend to do better as well, right? So, but of course, there's always that argument, and of course, there's always that risk. And sort of this area is hotly debated, and there's no current consensus. But that would be what I view as the biggest quote unquote risk of ESG. And of course, my own take is that I believe the fact that ESG is a smart beta and not alpha is statistically correct. As I said, I've had a research background. I actually have a degree in in physics as well. So I have a huge scientific and academia background as well. And as someone who really likes to get into the details, I think this is very interesting to me and it's very important, right? And you can probably replicate a lot of the ESG returns by not looking at specifically ESG labels, by looking at other labels, such as how much capital expenditure they do on green technology, right? That's a very nice proxy for environmental for ESG. how much independent directors they have. That's a very nice one for governance. And how much social responsibility they do. What is their general profitability, and how much of that goes to charitable and related events? That's a huge proxy for S, right? For social. And if you sort of nitpick and look at the data very, very, in detail, yes, ESG is probably strictly a smart beta and not an alpha, right? And however, despite this, I am still a huge believer in ESG investments. I still constantly invest in ESG because, for the 95% plus of the investors, I don't think that distinction really matters, right? I don't really need to know whether I should look for ESG company by ESG label, or the fact that they invest in new technology and green technology, right? I do care that either one provides a good return, and a lot of times maybe ESG is just easier to pinpoint because of these independent research, because of these, shall we say, such attention being focused on, right? Turning ESG into a smart beta actually, I think, makes it a lot more accessible than the average investor, right? If you looked back in 2015, 16, 17, where ESG really started, if you said, oh, I wanted to do an ESG fund, I believe in this stuff, you'll probably need to go to some private fund, mutual fund, or hedge fund to really get sort of that label. But right now, as I'm about to mention, and I think Eddie will mention as well, there are ETFs related to it, there are futures related to it, the exchange traded products, there is index related to it, and it just makes it more accessible. And as a portfolio manager, it makes me a little, quote unquote, sad because I can't charge higher fees for it. But as a society and for the investor, this is definitely better because you can start to access these ESGs much easier without mystifying it and putting it on a pedestal as an alpha. But where it's a smart beta, you can much easier to invest in it, and that has important implications. In fact, positive implications for everyone else, because then we'll see more inflow. Then it'll get a much bigger coverage, like the forum we're having today. Then society will generally be better when we all turn more attention into being, good corporate citizens, etc. So basically, my view is that yes, ESG is, of course, probably not strictly alpha. There are many ways to explore ESG investment, but the fact that it is not as mysterious and not as high skilled and not as hard to approach, I think actually makes it really better. I've also sort of on the side adjusted, mentioned the higher valuation issue. Yes, it's without doubt their higher valuation, but yes, we still see constant inflows. We have evidence to suggest that ESG investors are much more sticky and a much better ESG investments much better at holding on capital. Of course, there's always a risk when something very big happens, but so far we haven't seen the evidence of that. And I think overall, I still continue to believe ESG investments to outperform in the future, and ESG investments to be a worthwhile investment to invest in, even though strictly why may have changed over the past 3 years. And of course, as an academia or as a portfolio manager who's very invested in this space, I really want to see how this latest research develop, and that may have implications currently not known. But right now, I don't believe these sort of, I wouldn't call it anti-ESG papers, but like demystifying ESG papers as a huge issue in this space. In fact, I see it very much as a positive. But saying that, what do I think the future of ESG holds, right? Excuse my horrible pun here. I do think a key player in the future of ESG is ESG futures, right? And other derivatives such as options, swaps, et cetera, and this is where I think CME Group has done very well and is a leader in this field, and they offer the widest benchmark of futures and options products on ESG, right? And more importantly, on all kind of asset classes and all kind of risks. And lastly, like I said, it's important to look at every society wants to put an ESG label on their corporate annual report right now, but we need to look at history, what traditionally firms have been done. Are firms spending effort, spending time, attending these type of events or educating the public about this? And I think CME Group has, such a rich history and future commitment in this field, which I think is very important. This is a very quick timeline of some of the ESG products they have. And I want to say that it started off in 1993 and it's still going on very strong today, right? Be it from an emission perspective, emission, weather, biofuel, water, oil, precious metals, battery materials, etc., etc. I think CME has done some very good work in ESG, and I'm gonna specifically talk about a few of their products, but has continued to do very, very good work. One of the key products that I actually use personally is what we call SP 500 ESG Index. It is the #1 traded ESG contract globally. It is the most liquid, and what it basically is it looks at SP 500 companies, so large cap companies, and it provides a very set of transparent and important rules on which companies to pick that are ESG eligible, right? And this particular index is widely respected in the field, and a future on this index is extremely important to a step, right? And the fact that we can just trade this future off CME, I think it's very important. In addition, they also have the sort of its cousin S&P Europe 350 ESG futures, right? So basically, if you ever want to invest in ESG equities, I think these two futures is something you should really look at, especially if you care about sort of broad market access rather than some specific sectors, etc. The advantage of futures is manifold. It trades almost 24 hours a day, 23 and a bit a day. So as someone who's in Hong Kong hours is very refreshing to not necessarily have to wait till the US market opens before I can make a trade. Any exchange traded product is transparent in terms of quotes, in terms of its index construction, in terms of how it's gonna move up and down relative to the index, how it's much harder for sort of OTC products or things that are less transparent to subject to manipulation, etc. Also, it's got a very low transaction cost for the amount of notional it trades, and it has, like all futures, built-in leverage, which of course it comes also means it is higher risk, so one should be careful, but allows much more efficient use of financial resources, and also the ability to short, so you can pinpoint specific risks that you may have on the ESG space, and to risk control. I think this is very important. So again, if you're into ESG index, sort of overall market equity index investing, I definitely recommend this particular product. And of course, one big part of ESG, and I would almost say sort of getting a lot of press right now, is electronic vehicles, EV, right? And Tesla has become one of the 5 to 10 largest companies in the world. Of course, it depends on which day it is. It's a quite volatile stock, and given how much percentage of cars are electronic vehicles, which is very, very small, and evident by rising oil prices, and it is such a shows how much commitment people have for the future of electronic vehicles. And I think what CME has done very well is that if you want to invest in some electronic vehicles, but you think Tesla is too overpriced or sort of too direct, and it's have higher risk, higher volatility, and risks of sort of equity market moving around, there are many other ways to invest. I think a lot of ETFs from directions comes to mind, but also you can invest directly in the batteries, the bodywork, the electronic circuits, and the charging units, basically what goes into an electronic vehicle, right? So you move up the supply chain where there are far more opportunities and where sort of there isn't a rush to buy already. So CME has sort of futures on all of that, from cobalt, palladium, platinum as some of the precious metals, aluminum and steel as the base metals, and copper, extremely important, and from natural gas to coal and uranium, electricity, fuel, right? On top of that, I think CME has a lot of other really important ESG products, which you guys should sort of explore on their website. It includes sort of carbon credit, it includes water rights, et cetera, et cetera. And just as importantly, CME sort of pledges to source all of its gold and oil, et cetera, to be as much ethically and much compliance with ESG as possible. So with that, this sort of ends the presentation on my end. Obviously, I very much look forward to, if you have any questions, I very much look forward to you guys asking questions and discussing more at panel discussion. You guys can scan the QR code to follow us on our WeChat public WeChat, where we often have host seminars like this and share a lot of financial win. To be honest, this is a very unique experience because it's really not about our products or how we can help, but more about our social responsibility, which I think is most important. And of course, once again, thank you very much to everyone who spent this past two and a half hour, the 2.5 hours with us. And now I'll hand it back to Nikki.
Okay. Thank you, Mr. Jeffrey, to show their exploration of the key factors, ESG index, and accessible methods in the investing of ESG features. Actually, I'm really